Today I will show you the simplest price action strategy on the internet. This strategy uses no indicators, we don't look at any news, and there is no multi-time frame analysis. We stick only to the 1 hour chart, giving us the freedom of time. We trade simple price action, we look for momentum in the markets, we look for a trend. When there is a range, we don't trade, we stay out. We use an easy break and retest entry strategy, and as I said, we stick to the 1 hour chart. As the top traders say, simple always wins. You must not overcomplicate things, especially in trading, because it will just lead to confusion and taking many losses. So we either look for a simple trend continuation, which looks something like this, of course a nice uptrend. That is where we come in. We are trend traders, of course. And then we look in to get in on these break and retests. We look in to get in on the break and retest legs. Basically, the price breaks the most recent high, gives us a nice push, retests the most recent high. This is where we buy. Again, same thing happens here, we buy, and same thing happens again, we buy, and then the price just keeps trending to the upside. Second and even higher probability scenario that we look for is a nice clean descending structure where the price descends, taking out the stops, taking out the stops, taking out the stops, and then usually reverses to the upside. So for this scenario, the market makers are taking out these stops. Retail traders are buying here, here, of course, hoping for that reversal. And the market makers know this, so they keep taking them out and they keep filling up their positions. Once the market makers decide to push the price to the upside, that they have grabbed enough liquidity, that is where we come in. We notice the descending channel, we notice the taking out of the stops, and then we see confirmation that the market makers are ready to go up. And then we look for our nice break and retest entry right here. So we place our pending order at the most recent high level, we get tagged in, and price usually goes trending to the upside. What we want to avoid is this type of price action and this type of price action. Range bound price action is a big no-no. So what does this look like in the live markets? Well, let's take a look at TradingView. Here we have the euro and the Japanese yen. We have a descending structure. The market makers are clearly taking out people's stops, so there are traders going long here, all the way to the downside. So taking out stops in each of these levels. Now we know that the market is ready to move to the upside. We got the first evidence that the market is ready to move. Then we wait for a pullback. Market continues. We place our order at the most recent high for a break and retest entry. Market retests our level. We get tagged in and market then moves to the upside. Then we have the Aussie US dollar, same thing, we identify a descending structure. We see that the market makers have clearly taken out all of these stops. All of the traders who have been going long are now taken out and the liquidity has been grabbed to go to the upside. We then get an evidence that the market is ready to move up. We get clear momentum to the upside. We get a small pullback and we continue. At this point, this momentum is enough for us to place a pending long order. We then wait, market tags us in and moves to the upside. Market then clearly starts trending to the upside. Now a classic example of a trend trade on the pound. So we have a large impulse to the downside, we have a small pullback, we continue with momentum, we get clear momentum to the downside right here, we place our pending short order at the most recent low, we get tagged in, and the price clearly continues trending to the downside. So this was definitely a big move to the downside. Another example, Aussie US dollar, clear ascending at the top, the traders that went short right here got taken out, market then started moving to the downside, we got a small pullback and we continued with momentum. These candles showed us clear strength to the downside, then we placed our pending order, got tagged in, and price started moving to the downside. Back on the pound, again clear momentum to the downside, a small pullback, we continue with clear momentum, large red candles showing us price wants to go down, we place a pending short order for a break and retest, price then tags us in and shoots to the downside. This example is on the euro US dollar. We have a nice impulse to the downside, we have a really small pullback, we continue with large momentum, placing our pending short order at the most recent low. We wait to see what happens, price tags us in, and then we drop to the downside. So very easy and simple, anyone can learn this. It happens on all of the pairs, you just look for momentum, you look for a small pullback, and you look for momentum to continue. You then place a pending order, get tagged in, and the price shoots up or shoots down. Of course, the setup is not going to win every time, but that's just trading. When we lose a little, when we win a lot. If you want to learn more about these setups, I have one-on-one coaching calls, check out the link in the description, go to my website, make sure you book a call, and I will see you guys in the next video.